Hello traders, this is Rich Derrick from Tradesight. This is the market preview for Tuesday, February 5th, 2013. The current session we saw was one that was really characterized by a first day down with some weakness coming off of a new high recorded on Friday. What we saw was weakness in the S&Ps, the NQs, and also the Dow Jones, which makes for broad-based selling across the boards, or at least a lack of bidding interest. We saw profit taking, at least to begin with, here across the board. We'll have to see if this is something that the bears want to build on, or if the market is really just taking a pause here. We'll take a look at the market internals and some of the intermarkets a little bit later, and hopefully we'll have a little better beat on what's really happening here, and discover what this recent price action is really implying. We saw pretty much everything across the board was effectively lower, except for the bonds, which you can see were higher on the day, and that's really just a flight to quality and just kind of a safety bid, if you will, at least for the very short time here. So let's take a look at the major indexes that we follow. We'll take a look at the ES and the NQ futures. Right, and here's a look at the ES futures, and you can see that we did pull back off of range high. We effectively almost left a little bit of an island up here on this candle one in this new setup phase. But all we're really doing at this point so far is really just gaming this 8/8 level at 1500. We talked about this as we were approaching this level. This would be an important level. This would be a level that would have to be well traded. The other key consideration here when we're evaluating the price action, of course, is the interaction with the 10 EMA. The 10 EMA is still on the south side of price, but just barely. We did dip down below the 10 EMA here intraday, but ultimately wound up settling above that key indicator. So we're going to be keeping a close eye on the 10 EMA to see if we wind up getting a short-term change in trend here. Close below the 10 EMA and then a tick below that by at least one tick would indicate a short-term change in trend, or at least a lateral move here in the ES. But until that happens, we're still kind of holding pat here with this uptrend still in process, at least with an asterisk for now. And here's a look at the NQ futures. They really had a pretty poor day by any measure. They were definitely relatively weaker than the ES on the day. On a performance basis, we are still kind of boxed up in the same range, but if you take a real close look at where we settled today, you can see we settled exactly on the low of that opening candle from 2013 rather. So this is going to be an important area to keep on the radar. The box of the actual trading area does extend a little bit lower now, this 5/8 level at 26.95. So we're still within that boundary. If we start to lose that boundary, that would be one of the early indications that we're going to start picking up some momentum to the downside. But keep in mind here that we're just pulling to the downside here. We haven't exited this area yet, so there's really nothing new technically, actually, until we can get some resolution out of this range. This range has been lateral. The 10-day EMA is essentially flat for now, so there's really nothing to be learned until we exit this box. And here's a look at the multi-sector daily chart. You can see that all the major averages were a little bit lower here, with the exception of the more defensive-minded XAU. The XAU did catch a little bit of a bid. Nothing certainly convincing to the upside yet, but keep in mind that we do have an active secret exhaustion signal in the GDX, and that's something that we definitely want to keep an eye on. We did have a profitable long trade in the GDX today, something that we're going to be looking to on as a defensive play on the long side if the market does want to do some more backing and filling, maybe a little bit more consolidation here. If that does happen, we'll probably continue to see the GDX and the XAU have a bid to it until that process is done. So this is definitely one of the things that you want to keep on the radar on the long side. Now the 10-day trend had been moving more towards the overbought area of 0.85 as of the end of last week. We definitely had a downward bias all of last week. With the price action the way it was today, we saw a little bit of a bump up in this index, which is our 10-day trend. And so for now, we still remain neutral. We have not recorded that climactic 0.5 or greater recording. So we're still kind of just kind of sitting here waiting for that important level to trade. Once that does trade, that'll be one of the keys to alert us to a possible top in place here in the broad market. Haven't seen it yet, but we're definitely standing by and watching this very, very closely. Now, the other important ingredient that we always monitor for some kind of a climactic or a pivot is going to be the total put-call ratio. The put-call ratio did move up today, but it did not record anything climactic. So we're definitely not set up for some kind of a inflection point here, at least internally. We are seeing a little bit of a back off here, but we don't have the internals here to support it just yet. Okay, here's a look at the SOX versus the NDX. The SOX did make a new relative strength move high versus the NDX, so this is still a positive for the NASDAQ, even though we had relative weakness in NASDAQ. If this can continue higher, this will likely buffer any kind of a drop in the NDX overall. Here's our comparison chart of the OSX in the red versus the oil futures in the blue. The oil futures were relatively weak compared to the overall OSX, which is okay for now. This is really not a deal breaker. As long as the OSX, the oil services, can continue to outperform the underlying crude futures, that's actually a bullish condition for the market and certainly for the energy stocks. What you don't want to see is a roll down in the OSX and start to see that underperform the actual crude prices. That hasn't happened yet. So this is one little piece of evidence here that we could be just in the kind of washing machine, just trying to work off some of the recent gains in the market. If this develops into where we're seeing some relative weakness in the oil-based stocks represented here by the OSX, that's going to be a cause for concern. But right now, this is still okay as far as the bull case goes. Now, looking at the individual sectors, the XAU has taken a bounce and found some support here at the 0 ace level at 150. Price did reach up today to try and interact with the 10 EMA, but was unable to hold that level and ultimately got stuffed back down and closed about unchanged on the day. This defensive sector was the best performing sector on the day. The trend still remains down, but we definitely want to take note if this does start to get some price activity, especially on a closing basis above the 10 EMA. Here's the OSX, which is the Oil Services Index. Still kind of grappling with this 250 area, which is the 8 ace level on the Gann box. So this is definitely going to be an area of interest for both the bulls and the bears. Still positively trading above the 10 EMA. Note that today's price action was contained within the prior candle, so it's not necessarily a bearish day, and it actually did outperform the broad market. Since we're winding up here inside the prior candle, when we get a breakout above today's range, and then even better above Friday's range, we want to make sure we make note of those levels. BTK is still boxed up here. It's just kind of just hovering between these two key overbought areas. We're between plus 1/8 and plus 2/8 here on the Murray Math box. Very extended run here, originating down around this 1400 area, but nonetheless, it's still positive for now. We're just kind of consolidating here laterally. If we either close in a follow through below the 10 EMA, we're going to go to short-term negative, but that has not happened yet. Here's a look at the BKX. The BKX posted an inside day. Not quite a king and queen candle, but very close. We were a little bit short on the range, but definitely take note of this. If this breaks to the downside and closes below the 10 EMA, this could be a bit of a problem here for the market. We are fairly extended above the prior high here. Keep in mind that this is a relatively low beta group, so when you get some extension, it means more than certainly when you see that in a technology sector or the one of the higher beta energy sectors. Now here's the chart that could be a problem. The SOX did record an outside day down. We traded above the prior day's high, closed below the low, and we settled just above the 10 EMA. Note that we are still in the overbought territory of the GAN box, above the 8 ace level by a good distance here. We're right in the area of this this plus 1 ace area. Today's high was approximately the plus 2 ace level. This is going to be a problem for the market if this reverses to the downside for sure. Definitely it's going to affect the NASDAQ first, and then I would expect it to spill over into the broad market, because there's only so much for the defensive-minded stocks to absorb if this really starts to roll over. Remember, this is one of the more economically sensitive sectors, so if this starts to see south side action, we'll probably see it first here, and then we'll see it bleed into some of the other lower beta sections later. Should be no surprise that oil was lower on the day with this kind of broad-based weakness. We did get up in the area of this 7 ace level. Haven't been able to get up into this 8 ace level or the static trend line off of this secret countdown. We're kind of getting close to the end of the secret countdown here. We're now 10 bars up on the daily, not quite to the 13 signal, but just keep in mind here that if we do move higher, though, that's looming, and we're probably going to wind up getting that exhaustion before we get a recycle, so that's going to be a really important event if that does happen. We did settle below the 10 EMA, so tomorrow we're going to have to see if we can penetrate below the low of that bar and close below the 10 EMA for a second time. If we do, we'll in fact have a short-term change in trend to the downside. Gold futures remain boxed up. We're still kind of basically pinned between all the major moving averages. I would expect that this is going to find a little bit of a bid if we do start to turn to the downside here in the broad market, but the veracity of that's definitely going to have to prove itself. People are still pretty stock oriented right now, so I would definitely keep the gold miners in on the radar, and keep looking for potential long setups. There are going to be reversal setups here in the XAU index for the gold members. They could definitely be a haven of bidding if in fact we do see some more downside in the overall market, or even if we wind up with more of a lateral correction. So that's going to be it for tonight. As always, please feel free to leave a comment below, and until tomorrow, this has been Rich Derrick for Tradesight, and thanks for listening.